cool. We're recording. Aaron, so you're looking at KJPY?
So would you hop in if they give up a valid sell signal? Would you hop in?
I don't know because it's going higher on this one. So the problem with that is it's not establishing a lower high. Because if it's a higher high, then I mean it might be an issue. Because it might be like a like a short-term reversal. But yeah, that weird movement kind of screwed up because kind of panels. But no, I think if it comes back down, like if it doesn't break past this area, it should be fine.
Yeah, that makes sense. Yeah.
Because it looks like it's rejecting off it anyways. You check the order block. Yeah, this thing's laggy. Yeah, I think this should be cool. Like if you just wait for this to come back down. If it breaks back into the channel, I think it's good to go.
Yeah, I think so too.
Yeah.
Yeah, I know a lot of the JPY pairs, they were moving during London session last night, so we may experience the same thing today or tonight.
I think we're good. Yeah, let me go back to CHFJBY. Yeah, Josh, we've actually been watching that like this whole day. We were thinking about entering that about an hour ago. It wouldn't have triggered it yet. My computer is running like really slow. I don't know why it does that sometimes when I think it on Zoom. Does it happen to you, Aaron? Like when you first get on?
Yeah, well, doing the live earlier, it was freezing a little bit.
I don't know why. It just does that in the beginning, but then after it cools down, then it's all right. I'm gonna like close everything to make sure nothing's taking up too much resources.
It probably freezes whenever somebody new joins.
Oh yeah, no, you're right. I think that's
probably.
It. Yeah. All right, cool. Let's look at CJ. So CJ is it's an overall downtrend. You can tell with the below. The only problem why we didn't call this trade yet is because we have heavy Swiss news in about. I mean, it's not coming up too soon, but it's a little. Do you think that's too quick?
How long is it? Or when is it?
Yeah, it's like in less than 4 hours.
4 hours?
Yeah, so that's probably the reason why we wouldn't take it right now. But if we were going to take it, we would have moved our entry like way up here. I would have moved it no, actually, we would just leave it down here. How far is it from entry? Do you know it, Aaron?
Let's see. Like 40 pips.
Yeah. Actually, it's even closer. It's only 30. So this is actually enough space because like what we would do in the situation is like what we do right here. So if you guys understand how the K2 pullback strategy works, I'll just type it. It's similar to the original strategy, except it's just different entry points. So this is the K2 strategy. So for one, you just need a K2 signal present. Next, the K2 trend meter is opposite, red green. Opposite of signal. Let's make it smaller. And lastly, you just want to make sure that price not within 10, 15 pips, K2SR. And more specific entry price. Yeah, so these are the three requirements here. So if we were to, I'll go back to this one because this is a valid entry right here. This is really slow. All right, guys. So for one, you have to make sure that there's a K2 signal present. And right here, we have a buy signal. Next, you want to make sure that the K2 trend meter is opposite of the signal. So if the signal is green, you want to make sure that the trend meter is red. And then this indicates that this candle here is a retracement candle. So it does indicate that the momentum swinging upwards, but since the trend was that you, Aaron? That's weird. It made like a lot. All right, so Aaron, are you still there?
Yeah, I'm here. Yeah, I'm here.
Did you hear that noise? It's weird.
What noise?
I don't know, it's just me. It got like really loud for a second. I think it happens when someone new joins the room.
Oh yeah, see, yeah, somebody mic is unmuted.
Okay, that makes sense. I was like, man, it was loud. But yeah, Aaron, can you talk?
Yeah, I'm here.
All right, cool work.
Can you hear me?
Yeah. All right, so let's go back to the strategy. So first, you want to make sure that there's a K2 signal present. Right here, we got a buy signal. And then next, you just want to make sure that the K2 trend meter is opposite of the signal. So if the signal is green, you want to make sure that the trend meter is red. And this basically indicates that this isn't necessarily a buy signal, but it's more of a retracement signal. So if the trend is moving downwards heavily, if momentum swings upwards, we're only anticipating that to pull upwards temporarily, because it usually, if momentum swings in the opposite direction of a trend, it's usually just temporary and for a short little burst. So those two first requirements are met. Now we just want to make sure that entry price is not within 10 to 15 pips from the K2SR. So let me turn that on. And there we go. Price, the K2SR is above price right now. So to make sure on other time frames, we'll just move up different time frames to the 1 hour. The support's way above there. We'll go to the 2 hour. So okay, so we make sure that the entry would be on this candle right here. So we just want to make sure that it's not 10 to 15 pips. So right there, it's 20 pips away. So that gives us the green light to enter this trade. So we're gonna go back to the 30-minute. And for this trade, if we're using the pullback strategy, our entry is gonna be on the low of the retracement candle. So we'll use the short tool. We'll zoom out right here. And then our entry is gonna be on the low of the retracement candle, which is the signal candle right here. So there we go. We have our profit target and stop loss set up. Basically, this trade is going to be a 50 pip trade. And now we're just going to wait for it to trigger. So price hasn't triggered yet. It's really close, but it hasn't triggered the entry. And right there, it triggers. Now we're in the trade. I'll let it run. And this was really close. So for this situation, actually like if you're applying the original strategy, the way that we apply the stop loss and profit target would be at the previous swing. So this is actually too close. The previous swing would either be right here or like way up here. Let me see what happened there when we logged it. Usually the swings are that low. I'll go back here. So I'm gonna and then I'm gonna set the short positioning tool. That's weird. Aaron, does that ever happen?
I don't think so. I'm trying to figure out what's going on.
Yeah, because usually when you use the tool automatically, it sets it to the previous swing, and it's clearly not the swing right there. And usually our targets are like 100 pips. Let me see. Yeah, the problem with this trade is that the stop loss was way too tight, because when you're measuring CJ, it moves a little faster than other pairs. So you can see here, each candle moves like about 20 pips. And normally, if you're looking at a normal slower pair, it only moves about like 5 or 10 pips per candle. So the thing with this is, and we'll still run through it, but I personally would, I would put the stop loss a little farther up because you're supposed to put it at the previous swing. So if you follow the swing right here, I'd consider this low, and then this would be the swing right here. So technically, it would have been about 90 pips. And the way I figure that out is I'll follow the candles as it goes down, and then as it pulls back up, I'd consider that the swing high. And if I pull down again right here and swing it up, this would be the other swing. So the swing could either be right here at 63.7 pips or up here at 92.8 pips. So technically, I would have moved it probably to this one at 64 pips. And then I'll set the profit target at 64. And then that looks a little more proper because the previous stop loss was like way down here, and there's clearly no swing right there. So if you ran that, it would have hit profit target. But I mean, that's something that you'll learn along the way. If you guys are using the easy way to set the stop loss and profit target, you might have gone stopped out, and you probably wouldn't have known that that stop loss was too close, but you learn from it. So if I place it here again, yeah, see, it doesn't really make sense to me because if I place it now, it doesn't set it that close. Yeah, I don't know, that's unusual. I think if you're doing it live, it wouldn't have set it that close, but this makes sense because that's the previous swing there. But yeah, depending on where you put your stop loss, you would have hit profit target or you would have even got stopped out. But you'll learn from it. But yeah, so basically, if we're following that same strategy for this upcoming move over here, we would have done the same thing, zoomed out, put the short position at the low of this candle, the low of the signal candle. So this is where our parameters would be. So if you guys want to enter this trade, you guys are more than welcome. The only problem is we have news coming up at midnight. So I personally wouldn't have taken it because it's a little too close. And let's see how far is it from. It's actually really tight, like really close to the support too. It's about 15 pips. You're literally on the dot of the third requirement. So I'd consider this a very risky trade. But if you guys want to take the risk, you guys are more than welcome. I'll set the parameters right here. I'm not going to send it as an official signal because it's a little too risky. But if you guys do want to take it, that would be the entry price, 110.691, profit at 109.993, and stop loss at 111.89. And I'll leave that up for a few seconds just so you guys can copy it if you guys want to. If not, I personally wouldn't take it. It's a little too close to support. All right, so next we're going to look at GJ. So let's look at GJ. All right, cool. So GJ, so we were looking at this trade earlier. We were going to enter a pullback here, which would have went into profit approximately 22 pips. So if you're using the exit strategy, you would have moved your stop loss to break even. You'd have gone stopped out at break even. But yeah, I'm glad we didn't take that one. So it looks like it pulled back pretty heavy. I wonder what happens there. Let's go back here. Yeah, so this was the entry we looked at previously when we were thinking about taking it. Oh, that's what happened. So we didn't take it because it was too close to support. It was about 15 pips. And it looks like price rejected right off it. Yeah, exactly. So that's exactly why we follow that third requirement to make sure that price isn't too close to the SR, because as you can see there, you know, price rejected exactly off it. So to have better confirmation, I definitely would use a K2SR indicator. But let's look at how it looks right now. All right, cool. So it looks like it broke the trend line. So what might happen here is, actually, let's go on the 1 hour. Let me see if I can draw a better trend line, because that trend line kind of looks off. Actually, it's fine. But it can get moved up. Aaron, what do you think? Do you think the trend line's better down there or up here?
Like that. That's way better right there.
All right.
Yeah.
Yeah. So I think the short-term trend is still downwards. It doesn't really look like it's gonna reverse yet. So the only, I would see this as reversing if price reaches this area up here. Because if it reaches this area, then it'll establish a higher high. Right now it's still a lower high. So if you're looking at it from up here, this is the high, and this is the lower low. And then this is the higher high. And this is you know, it's just a classic example of the Elliott wave. If you guys follow the Elliott wave, I mean, it's not perfect, but for the most part, it's establishing, you know, lower lows and lower highs. So if this establishes as a lower high, then we could probably see it come back further. I mean, I don't trade Elliott wave, but you know, this is a basic setup for it. Actually, it's already been. Aaron, do you think it's been fully filled? Do you use Elliott wave? I know it's like 5 steps.
Never mind. Nope.
So let me use the tool here. I didn't use that tool, so I wasn't. Okay, here we go. So Elliott wave, 1, 2, 3, 4. So this might have been the full move right here. If this wasn't the Elliott wave. So if anything, it probably would have started up here again. So 1, 2, 3. Actually, this is gonna be good because it's establishing a higher high. So this probably might not be a continuation of the Elliott wave, but I still see it possibly rejecting off this trend line or rejecting off the support. So you can see it came up here. Personally, I think this is what's going to happen because it's still in a downtrend. I think it's going to reject off these. Let me take off these. Yeah, so that's a little cleaner for you. So I think it would reject off that trend line and then probably come down because it didn't confirm here. So another scenario is if the price breaks above the support again and tests the support like it did right here. But following that test, if it's a strong bullish candle, like, I'm trying to see if there's an example here. Strong bullish candle. Yeah, so if we saw a candle like this, so say price tested this right here again, it came down, and it rejected, and then we saw a strong bullish candle like one of these. Yeah, so if we see a strong bullish candle like one of these, or you know, one of these, maybe one of these. Yeah, if price came down, tested it, rejected, and then it was followed by one of these strong bullish candles right here, then we could probably see that shoot upwards and possibly test this resistance, if not break through, and shoot to the moon. That's just like a clear, you know, simple price action pattern of it confirming breaking support and establishing this as a new support and continuing upwards. But I mean, you won't really know until you see what the next candle says. It's basically like a storyline. So you can see here, price broke the support. It rejected off the support. Actually, this was resistance. So if price came down here, it broke resistance, then rejected off support, and then it didn't confirm. But if it does it again, confirms, and I could see it going on. But you won't really know until price actually breaks. So right now it's at a crucial point where it could either shoot back downwards and correct to the current trend, or it can break upwards and test the resistance and possibly break through and reverse. So I probably stay away from GJ right now until you're able to confirm. Oh, there's GJ news coming through. Yeah, so there's GJ news coming around 11:30. So that's about 5 hours.
It's medium, huh?
It's medium news, yeah, but since it's NFP week, it might affect it. So for GJ, Nawabian, hey Nawabian. So if for GJ, it says that you're stuck there. Are you in a buy or a sell? Because we can analyze it, specific directions. If you're in a buy or a sell, he's selling. Okay, cool. So if you're selling, I think you're still fine because I'd rather be in a sell than in a buy right now. It looks like it's tested this trend line, twice already, and it's rejected. And it followed up with a strong bearish candle right here. So if this next candle confirms bearish and it shows some price action that's going to come back down, I think it's going to continue downward. So I think you're in a good space. I'd probably, depending on where your stop loss is, I think this would be a good area. This resistance up here, so 133.48, which is about 26 pips away. I'd probably put it up here if you can, if you're not over leveraging the risk. I'd probably put the stop loss somewhere around here because I feel that if price reaches this area right here, they're going to be stop loss hunting. So it's probably going to gap up a little bit. It's going to gap up like to this area. So that's why I'd probably put it up here because they'll probably stop loss hunt all of the stops in this area. And it'll probably push it a little high, like it's right here. And then it'll probably shoot back down and correct. So once it gets to this area, this is kind of like a bad area to be in if your stop loss is too close. So I'd probably put your stop loss up here at 133.601, or to be safer, I'd put it at 133.707, just in case. But if you're already over leveraging, then I wouldn't move. I just leave where it's at. Sometimes you just have to take the loss, which will bounce back. So I wouldn't worry too much about it. All right, next you wanted us to look at CAD JPY. I'm assuming you're selling that one too, since they're both JPY pairs. Let's take a look at JPY. Yeah, it's the same setup here too. Actually, I lined this up right here. So I think this is the 4-hour support. Aaron, would you put the trend line up here too, or you leave it?
I can move it up.
Yeah, so I'd probably, since they're both JPY pairs, they're probably gonna move in the same direction. So looking at this, it's gonna be similar. I'm pretty sure this was probably the 4-hour resistance or support at that time when I did line this up. So it looks like price is rejected off this resistance point 1, 2, 3 times. So I see it coming down. So if you're in a sell, I think you're fine. There wasn't any confirmation. It looks like price rejected, but it didn't confirm with a bearish candle. So what it looks like it's doing now is it might test this trend line and then possibly come down to test the support and then continue downwards. Let me see if there's an overall trend on the trend meter. Yeah, actually the overall trend is bearish, so I think you're fine. I think it's going to come back down. let me see if we have a, yeah, we don't even have a signal right now. So I think if we get a K2 sell signal, I think it'll come down pretty heavy. So I'd probably just sit tight and watch it until price confirms, because it looks like it's still testing it. I might test the trend line, or I might even test the resistance again, but I think eventually it'll come down. So depending on where your stop loss is, I think a good area for the stop loss would probably be somewhere up here. Because like I said previously, once price gets closer to the resistance, there's a ton of, I'm assuming there's a ton of stop losses just sitting here. So they're probably going to go for a stop loss run around this area. They're just going to hunt stop losses. And then it's probably going to get pushed up here, and it'll probably shoot down. But I don't think it's going to push up that far. I mean, at least it doesn't look like it. On the 30 minutes. For the 1 hour. Yeah, even for the 1 hour. On the 1 hour, it's actually right on the resistance, or whatever this was. It's 1 4 hour. Yeah, I think when I set that up, we were probably up here. Yeah, so that's when the support was. Or I mean, I guess the resistance at that point. That was where the resistance was established, and that's why I drew that line that was already there. And as you can see here, it bounced like perfectly off the K2 support resistance. So we have the support down here, and price rejected right off it. Came back up, tested the resistance, came back down, broke right through support. And it looks like it's doing the same thing it did here. So came up, tested, came back down. I see it coming up, testing again, and then most likely coming back down. So if you're in a sell for CAD JPY, I think you're fine. Just hang tight and don't put your stop loss too close, because they're definitely gonna go for a stop loss right here. All right, let's see. What do we got next? We got a signal for UK 100. Oh, we got a lot of signals. Aaron, did you see these? Oh, actually, no, these are old. See, so we got a signal for UK 100. There's no overall trend, so the thing is, I'm just manually drawing the trend lines right now. So this might be a good, if you guys are looking to scalp this would probably be a good sell stop entry right here. Aaron, are the indices still dropping down? Or are they all retracing?
Yeah, they are, but they're retracing right now.
Let's see. Yeah, they're all kind of retracing, so I'd probably hold off on those for time being until they come back down. I think they're going to come back down. I don't see them. I don't see them swinging up too high. And it still hasn't established a new high yet, so it'll probably establish a new high around this area. So yeah, I'd hold off on entering any indices right now, and especially during Asia, it's pretty slow. I think even the Japan index is moving slow too. Yeah, they're all moving pretty slow. So let's hold off on any indices right now. We keep going down the list. So Josh said that EG is looking interesting. Did you take a look at this too, Aaron?
Which one? EG?
EG, yeah.
Nope. There was a valid signal earlier, but I'm assuming it was too close to support. It had matched the trend meter.
Let's see.
Well, it could probably drop during London session.
Yeah, it looks like looks pretty good.
It's already creating lower highs and lower lows, so yeah.
I mean, even this one right here too. So it looks like the K2 strategy has been working pretty well with EG, even with like, the shitty market conditions. Yeah, it's too close to the sport. So we wouldn't have taken this, but it would have been a winner. So if we were to use the K2 strategy on here, let's type it up here. Original K2 trading strategy. Signal present. K2 matches. 3 price now 10. This is optional. I mean, this is an extra requirement that I added because I wanted to make sure, every trade I take is almost guaranteed. But if you're following the original requirements, so there needs to be a K2 signal present. And then next, you just want to make sure that the K2 trend meter matches. So these are both red and red. So this gives you a valid sell entry. So once you set that up, to determine what the stop loss and profit target is, you're going to zoom out, use the short tool, and then just set it up. It's actually way too high. Not for EG, because if you guys know how EG moves, it moves really slow. So I mean, that's way too much. 100 pips, it's crazy. So if we're using it manually, you put it at the previous swing, which is either right here, 48.2 pips, or like way up here for 81.1 pips. So I'd probably put it right here at 80. I'll just round it to 50 or 49 pips. So this would be the setup right here. You're pretty much risking 49 pips to make 49 pips. But if you're using the K2 exit strategy, then you could move your stop loss and profit as it moves down. I'm just using this for an example. Personally, I wouldn't have taken this trade, but this is still a valid K2 entry. The reason why I wouldn't take it is because support's so close. And what usually happens is price will reject off support and retrace back. And I don't want to take any risky trades, especially for our signals, because we have such a high win percentage. So I wouldn't have taken it. I would have skipped it. But if you were to apply it, you could let it run. And there you go, hit profit target. So you would have hit profit target in about like 3.5 hours. So in 3.5 hours, you would have made like nearly 50 pips. And if you're trading, so that's like plus, it was 49 to be exact. Pip gain. If you're trading standard lot, which is all I trade, it's equal to $10 per pip. So if you plus 49 pip gain times $10, you would have made, what is that, $490 USD in 3 hours. Pretty nice right there. Let's see. OD said, how do you get the K2 program on TradingView? So in order to add these indicators on your chart, so normally you can see here, this is how the chart looks with the indicators. Without the indicators, this is how the chart looks. So I mean, it's a lot harder to see where to enter trades. But if you do have the K2 indicators, it makes it a breeze. You literally just match colors. If you can match, red with red, you can make money. Green with green, you can make money. But yeah, OD's asking how do you get them on TradingView. So to get them on TradingView, you go to indicators, and then you go to invite only scripts, and then it'll show up right here. If you're subscribing to K2, it'll be a green lock. It'll be unlocked for you to use them. But if you're not subscribing, it'll be red. So if you try to add them on your chart now and you're not subscribing, then you're not going to get them on your chart. But if you are a subscribing member, then you'll get these indicators on your chart, and they'll look like this. So if you were to apply this strategy, just trading EG or not even trading any other pairs, you could have made a ton of money just trading this, because if you see here, there's a valid entry here. So as you can see, if the signal's red and the trend meter is red, then this gives you the green light to enter. to enter this trade here, we'd have made 108 pips. So if you could even make another thing. So let's see. So we have a gain of, if you were to take that trade, that would have been a plus, what is it? 108. 108 pip gain. And then, all right, so you would have won that one, obviously. Again, right here, it's another valid entry. It's a red signal, and you match it with the red trend meter. You enter this for short position, right there. That's a gain. That's a win of 101 pips. So 101 pip gain. Next, there's another entry right here. As you can see, it's a red signal, and the trend meter down there is red. In our short position right there. Another winner for 92.8 pips. 92.8 pip gain. And as you can see right here, there's another entry. This isn't valid because it's blue down here. If the trend meter is blue, then that means that the overall trend is neutral, and you don't want to enter trades when they're neutral because you want to only enter trades that are going the direction of the trend. So if we add all these up, we'd have those plus 49 pip gain, and then the total pips would have been, so let's add this up, 108 plus 101 plus 92.8 plus 49, 350.8. So 350.8 pip gain. If you're trading standard lot, it's $10 a pip. So if you made plus 350.8 pips times 10 bucks, you would have made 3,508 USD. So that's how much you would have made if you just traded EG, which is a really slow pair. So this is actually a really easy pair to trade, and this would have taken. So this trade won in about. Actually, there's just 3 trades. So if you traded this from the 26th till today, that's like less than a week. You could have made 3,508 just trading EG with the K2 strategy. And this is when the markets are pretty shitty. So I mean, if you're able to win this much when the markets are bad, imagine how much you could win when the markets are actually good and trending. But yeah, pretty much it's pretty simple. But I think you guys were looking at it. Aaron, were you guys looking at this recently or like currently?
We said EG.
Yeah. So EG does look good. The only problem is, actually, no, it's perfect. You could actually take this, Josh, if you wanted to. I mean, I wouldn't take it now; it's too late. But if you did enter it right here, you could have you'd have done pretty well because you'd be in profit right now. So on that first candle when you entered, it would have been profit 10 pips. But I still see it coming down because the overall trend is bearish right now. So I see it coming down further. It looks like it's coming down right now, so it's actually going to come down, probably test the support, maybe reject. Not sure if it will, but it might reject, come back, and then break through. So if you're looking to enter this, I think this would be a good entry. I just wouldn't enter it now because I want prime entry. So if you were to enter this, my spread is 3.4. Oh, this isn't even my real spread. This is just a normal spread. So if you're trading a normal account, which is I'm pretty sure it's the same account that you guys are trading, which is like the commission or non-commission, it'd be about 3.1 spread. So if you were to enter this, your entry would have been, actually you would have been fine. Even if you enter right now, you'd still get in that normal entry point. But like I said with EG, it's a really slow pair, so you're probably not going to see any movement until London. Because you can see here, these are some small candles, and then there's just some huge movement once it hit midnight. So this is London open. And you can see it's a clear like difference in movement. Like right here, it's moving like a snail, and then once London opened, it started shooting down like crazy. Let's see. Pipboy said, "How do you know which pairs are slow and which ones are fast?" So the slow pairs are going to be like pairs from the same area. I'm not same area, but like the euro versus the GBP, they're very similar worth. So no, I mean not worth, but these are going to move slow. Other pairs like CHF euro, or is it Aaron? Is it a euro CHF? Oh yeah, like right here.
That one, yeah.
So
And like AUD, NZD, those two pairs.
these two are really slow. Euro CHF, Euro GBP, AUD NZD, because they're both from the same, they're both from the same area, and like there's not going to be a huge difference when you're pairing those together compared to if you're pairing like euro to the Japan yen, because the thing is like 1 euro is worth 117 Japan yen, or similar to like the pound AUD. So 1 pound is worth 2.03 Australian dollars. So that's why they move so much, because there's such a big spread between the two currencies. But if you're looking at currencies that are very, very close, kind of like EU, EU is a little close too. It's only about like 1 euro is worth 1.09 USD. And that, it doesn't move, it moves fast, but it doesn't move crazy fast. So you can see like each candle is only like, 10 to 15 pips max. But if you're looking at a candle from GA, like this is a normal candle right here. So you see the difference? It's huge. One candle's like a 50, 60 pip move compared to EU. So that's a 56.8 move. For Euro USD, one candle is only like 10 pips. It's nothing, like nothing compared to it. So yeah, Pitboy, it all comes with like practice and just like learning basic fundamentals. But if you have any specific questions to help you, just go ahead and message me or Aaron. We can answer your questions. But yeah, basically, if the pairs are very similar, like Euro CHF and Euro GBP, those are going to be slow moving pairs. But if you're looking at pairs that have a huge differential, then you're going to see them move a lot, like GA, EN. See, they're like huge differences, because like 1 euro is worth 1.84 New Zealand dollars. And that's like the basic explanation. So when you go back, we have, all right, Josh, we went over your question. CT, oh yeah, CT, you had a setup for UC, USD CHF. Yeah, I think your entry was somewhere around here, right? I'll mark it on the chart. I remember you sent a chart earlier, but I think we're pretty close. So let's see, 966,777. All right, cool. Yeah, so your entry's right there. I don't know the exact parameters of your stop loss TP, but we can just put like 50 should be fine. Or no, it's pretty high actually. So we'll just ballpark it for now, unless I could get your specific parameters. No, I'm not in UC. I just saw your message up here where you said that your sell limit was hit. So I'm just charting it, but I'm not in it myself. It's actually an uptrend, so I sell limit. Yeah, unless you're seeing the rejection. So maybe were you looking at order blocks? Looks like because the overall trend is neutral, so I wouldn't apply with the trend meter. And this is what I mean by the trend meter. Yeah, this thing's moving so slow. Yeah, so the trend meter down here will change colors depending on what the overall trend is on 4 different time frames. If you're using the KT trend meter, you can set up your your trends right here. So if you want to see what the trend is on a 30-minute, the 1 hour, 2 hour, 4 hour, if all of these are trending the same direction, then this will be colored down here. So at this point right here, price is trending downwards on all 4 time frames. But right now, there's no clear trend, and that's why it's blue down here. Yeah, looking at the order blocks, it's like way up here, but your entry was right here. Let's see. Yeah, I don't know if I'd take a sell here. I mean, if you're trading rejections, then yeah, it makes sense because it could probably reject off the resistance here. But personally, I don't trade that way. I don't counter trend trade. So my personal preference, I wouldn't have taken it because the way that I see it, I probably see it coming up. Like it might, if it breaks through here, which it might not. You know, I could be wrong. I just see it continuing upwards. So if we're looking at the chart from a bigger, yeah, if I'm looking at it from a bigger perspective, like full view, it looks like it's been trending up for a while. So personally,
How does a 4-hour look?
yeah, let's see. Let's check out these order blocks.
Oh yeah, it can definitely go up.
Yeah, it looks like it established a lower, higher low here, and it definitely looks like it's speeding up. So CT, if you're in this, man, praying for you, bro. Nah, I mean, personally, I think it's gonna keep going up because it just established, you know, here's a low, higher low, higher low. But yeah, it did come down here. So I don't know if this would be considered a higher low. This might have been like the whole move. So it could have been like, you know, way up there. So low, high, low. I mean, if we're looking at it from, actually, I don't know. Because this is a 4-hour chart, actually. Let's go on the lower ones. Let's see, I still see an uptrend right here. So yeah, if this was, if we were following, you know, the Elliott wave theory, so this would be 1, 2, possibly 3. And if this is 4, then this could shoot really high if it's going to complete the Elliott wave. So personally, I wouldn't have taken a sell here. I mean, it might come down. Oh, okay, cool. Yeah, I saw CT's message. So he had an alert hit, but he didn't enter. Yeah, no, that makes sense. The resistance, that would have sent an alert in that area too, which makes sense. But yeah, price was to break past this and confirm that this is, you know, the new support, then I definitely see it shooting upwards. So I'll probably keep an eye on this. Maybe we'll enter this later. The only problem again is there's CHF news in about a couple hours, so I'd probably just chill because a lot could happen with this news, plus it being an FP week. Yeah, I agree with CT. You said there's no liquidity there. I don't see anything there either. Yeah, good call. All right, let's see what else we got here. Patria, CHF, Start from the bottom. Oh, that's Stanley. I was like, what? Why did it say Patria? iPod? You got a new phone. Let's see. So you wanted us to look at CHF, and we were looking at that earlier actually. So if we were to apply the K2 pullback strategy, it would be a good entry right here. The reason why we wouldn't take it right now is because there's CHF news coming in about, you know, a couple hours, in about maybe like Yeah, in like less than 3 hours. So I mean that'd be an issue because um, well, like we won't be sure which way it's moving. But if you do want to set a sell stop entry right here, which it's still pretty far. It's about 33 pips away. So you have a lot of cushion right here. So the thing is, when the news does release in a couple hours, if price shoots down, it'll automatically trigger your sell stop entry right here, and you could actually go straight to the you'll be writing that volatility down. But it's still a risk because say price down pretty close within now and news, um, you might get triggered and get in the trade, and then you might get screwed and it might reverse like straight up there. So personally, I probably wouldn't take it right now. I would just wait for the news to be released. But we do have a valid K2 sell stop right here for a pullback entry. And if you do want to take it, here's the parameter. So the entry would be 110.691. Profit target would be 109.993 for 69.8 pips. And then we have the stop loss same distance away at 111.289. I'm not going to post this because the news coming up. It's a little too risky. But if you do want to take the risk, you're more than welcome. So I'll leave this up for a couple seconds, let you guys write it down if you guys want it. If not, we're going to move down to the next one. All right, so Nawabian said to check out GU. So let me pull up GU real quick. Let's see. Yeah, so I've been watching GU all day today too. I was waiting for a good buy entry. Like what I was hoping for, I was hoping for this to be a red candle with a red signal with a red candle, so that I can enter a pullback entry. But it doesn't look like it came out like that. As you can see here, it's a bullish candle with a sell entry. So personally, if that happens, I usually just disregard those candles because they don't fit criteria. But yeah, looking at the looking at this, see, we had this weird gap in the morning, or was this today, or was that yesterday? This was a gap. What was that one night, right, when it just gapped randomly?
Yeah, it was.
Yeah,
I forgot what day it was.
yeah. So the problem with this is, I mean, it's a little hard to draw, proper trend lines because it's such a random gap. So if you were to eyeball, drawing the trend line, I still see it trending upwards. So I'd probably start the trend from right here and then close it off like that. The trend meter is kind of indecisive. It's going from green to blue. So this demonstrates that the trend was swinging upwards heavily on 4 different time frames. Right here it turned blue, so it became neutral. It looks like price was trying to reverse. And then right here, it corrected back upwards. But for the most part, it kind of looks like some consolidation right now. What do you think, Aaron?
Yeah, it is. I would and it's kind of like on support a little bit too on a higher time frame.
Yeah, actually, no, yeah. So I wouldn't take GU right now. I just put on the K2SR indicator. So the K2SR indicator automatically plots support resistance on the chart for you. And you can set it to, as many candles back as you want. So right now I have it set to 100 candles. So it's going to go back 100 1-hour candles back, and then it's going to automatically set the strongest support resistance for you. But you can always change it. If you want it to go farther back, you can add it to 0 and go back 1,000 candles. But the problem is when you do that, you might go too far back. And when you go too far back, I'll show you here. So if you go back 4,900 candles, that's pretty far back. And then, I mean, it didn't really adjust here. But sometimes if you do that on other pairs, it goes back by too much data. And when you do that, it screws up the algorithm. And then, support resistance will be all over the place. So I usually just, since I trade intraday, I just leave it at 100 candles, which works perfect for me. So if you were to use that just to get a good image of like where price is, you can see that price is clearly in a consolidation right now. It's just consolidating. So the problem with it being in consolidation is that price can, once it breaks out and confirms, it could like skyrocket super far. It'll like shoot, either up super far or down super far. And there's a ton of news coming up because it is NFT week. So I think that's exactly why it's consolidating right now. You know, it's kind of like it's kind of a guessing game. It's kind of like, you know, you're not sure which way it's going to go, but on Friday it's going to shoot one way or the other. Let me see if I can see an example for when it consolidated heavy and broke out. So it kind of consolidated right here, but not completely. Kind of want to get a bigger, like where it's super clear. Yeah, so you can kind of see right here. It's kind of similar to what's going on over there right now. So this is like the consolidation area. And then you can see that, you know, it was in consolidation for like an entire day, maybe 2 days. And then, you know, price broke up, came back down. It didn't reject, so it came back down, and it broke back into a consolidation. And then once it broke below, like as you can see right here, it broke down, rejected, but it didn't confirm. So in the situation, it broke back into a consolidation. And once it broke low, it dropped down super far. It's crazy. Yeah. So I'm going to try to zoom out so you can see. Yeah, so you can see right here when it broke out of consolidation, it dropped, wow, that's crazy. It dropped like 1,600 pips. So that's probably what's going to happen next. When it breaks out of here, it could either, you know, continue upwards. It looks like the overall trend is up, or it can break downwards. And the thing is, with everything going on with the coronavirus, I mean, my bet is that it's going to go up because I think the U.S. dollar is just going to get weaker. You can tell by following, you know, the U.S. dollar index and like all the indices. So personally, I think it's going to break upwards and go up. But right now, I wouldn't enter this trade or enter any type of GU trades because the range is about, I mean, the range is pretty wide. It's 100 pips, so you can probably scalp in between. But it's pretty risky because if you're going to be scalping in the wrong direction and then price just breaks out in, you know, the opposite direction, you're pretty much screwed because like it's gonna go in the opposite direction for a long time, or you can get like a random spike like it did right here. So if you're scalping within this area and you saw that it was coming closer down and you wanted to scalp it upwards because you thought it would reject off the support. Aaron, can you check out the alerts, see if there's any
I'll
trade?
check it out right now.
Okay.
AUD, NZD.
If you got caught with this, you would have been screwed. You would have been, you know, 81 pips in the hole. So personally, I wouldn't take a GU right now. With that being said, I'm buying GU. Oh yeah, no, definitely. So yeah, if you can get out within this area, you know, if you can at least get into profit, even like a little bit, or even just break even, I would just get out. So you have a 50 pip range right now from here until the resistance where it's probably going to reject. So I think at this point, if you can get out somewhere in this area, you'll definitely get out. Let me go to your UJ real quick. That's what you wanted as well. So let's see. Yeah, so GU and UJ. Yeah, so we were looking at UJ earlier. I don't know if Aaron, we didn't call this, right? UJ?
Oh, no, we didn't call it.
Okay, cool. Yeah, so we were looking at UJ earlier. It looks like the overall trend is downwards right now because the trend meter is red. And as I said before, I have this set to the 30-minute trend, 1 hour trend, 2 hour trend, and 4 hour trend. So this would be the intraday trend right now. But you can see right here it turned blue. So it looks like price might be trying to either reverse or it's pulling back pretty heavily. But yeah, if you were going to take this entry, usually enter on a 30-minute. Yeah, if you're going to take this entry, there's a valid K2 entry here, where if you match red and red, it gives you a valid sell. So if you did enter that, you would have been in profit. Personally, I think it might, let's see, so it broke. So price broke right here. It rejected off support. And then it confirmed with a bullish candle, but it wasn't a very strong bullish candle. And it was followed by a bearish candle. So what I see happening here, if you're in a sell, I think that you're in a good position. I think it's going to come back down, test the support, and then hopefully break through. If not, it might come reject off the support and test the resistance. But if that happens, then you might be screwed, because if you're in a sell and it breaks this area right here, it's going to establish a higher high. And then if it does that and then establishes another higher high up here, then I can see it reversing upwards. So yeah, if it breaks, if that happens, then I can see it going to the moon. But the thing is, like I said earlier, it's NFP week, and that's why price is, it's acting weird. And even with the coronavirus going on, you'd expect JPY to be very, you expect UJ to be very bearish, because JPY is a safe haven currency. As you can see here, it's clear that, once the coronavirus came out, everyone put their money in JPY, and that's why it gained so much strength right here. So I do think it's going to continue and come back down. But the only problem is, depending on where your stop loss is, if it's too close, like, you might get stopped out. So I think it's a good place to put your stop loss would have to be somewhere above here. This would be a good area, but it's a little too close. So depending on your spread, you might get stopped out just because of your spread. So if you measure this from resistance to that area, that's only 5 pips. You'll definitely get stopped out. So I'd put your stop loss like up here if you're going to sell. And that should give you some cushion to, survive whatever comes up here. It's about 15 pips. Because what's going to happen is, once it gets to this area, they're going to stop loss hunt. There's a lot of people that have their stop losses in this area. So, if 1,000 people or 10,000 people have like stop losses right here, and they all get triggered, it's going to push up like quite a bit. Let's see. All right, cool. But yeah, it looks like it's coming down right now. So if you're in a sell, I think you should be perfectly fine. Yeah, it says the YB said I'm selling UJ, but on a 30. Oh, you're on a 36 pip loss. Okay, so you're right here. Oh no, you're fine. So yeah, if you're in a 36 pip loss, you can make it down to break even. But I think when you hit break even, you should like, because it looks like it's gonna, if it does reach that far, it's probably gonna keep pushing down a little farther. So I'm assuming your entry is around this area right here. Like once price breaks this area and pulls down here, I would immediately move your stop loss to in profit or break even. Because the thing is, once midnight hits and London opens, you can probably see like a lot of volatility and push it, in your direction or against you. So if that happens, I think you'd be better off at least locking in your profits or getting out break even. Because I take break even after like over any loss. So yeah, it's up to your preference, but I think it's a risky trade right now. Let's see, what else we got? Let me check my messages real quick. Make sure nothing. Cool. Yeah, I didn't get anything, so let's see. Question was AUS 200. Yeah, so let's look at the Australian index. I think some of you guys might have been in that from yesterday. I haven't been following the indices chat. Oh, if you're in it, you're still in profit. But personally, I would just get out. If you're in profit, then yeah, get out right now, because it's moving a little weird. There's a lot of uncertainty. But I know a lot of people who took it, including myself. Once it came down here, I exited. So I exited with a pretty decent profit. Yeah, about like 400 pips. It's not that bad. Trading, like a 0.03 lot size. It's a couple $100. But yeah, if you're in the same trade that we sent out yesterday, I would exit. You would be in profit about 300 pips, which is not bad. That'll cover your spread, even if you have like a pretty decent wide spread, like around 200. But it looks like it's in consolidation right now. I'm gonna delete that, or it's going back into consolidation. So it broke below. and then it came back, and then now it's stuck in consolidation again. So that's the reason why I would get out, because the problem is when it's stuck in consolidation, it can break out either direction. So if price reaches this area and you're in a sell, you're gonna get screwed because it's gonna shoot up. If you want to take the risk, it could also shoot down. But if you're looking at the overall trend, so on the 30th, I think this was 2 days ago, it was trending upwards. Looks like it tried to reverse, or at least pull back. It became neutral right here. Then it became bullish again, and then right here it became neutral. It looks like it was trying to reverse here, but price didn't let it. And the AUD news yesterday really affected the market, or I think it was this morning actually. So the thing is, here, you don't have the link, right, for the that news that we got,
So for the news, you said the link.
or the picture or something. It was something about building contracts. Like there were a bunch of contracts that were granted. So
Your connection is breaking up.
oh, can you hear me now?
It's a little staticky.
But yeah, if you're in AU 200, I probably would get out right now. If you're in profit, you should be in profit. There's definitely something that I wouldn't be taking right now. It doesn't look like it's moving similar to the other indices. It's like AU 200. So let's look at US 30. Yeah, so US 30 is still moving directional. Let's look at GR. Directional. Yeah, they're all moving directional. The problem with AUD is that it's moving sideways. So I'd probably get out right now if you could. That's just my advice. Yeah, no problem, dude. If you have any other questions, feel free to put them in the chat, and then we can look over trades for you. So let me see what's next. We got. So Jay said, could you go over 5-minute scalping strategy for buy with indices? Yeah, bro, sure. So let's see. So so we could do it. The only problem with looking at it right now is because due to current market conditions, things hard to find a trend, but we could enter one right here. So this is so if you have access to the K2 course, when trading indices, you recommend that you use the pullback strategy. So this is the K2 pullback strategy. And this is a little complicated, but once you do it a couple times, you get used to it. You're pretty much doing the same exact strategy, but you're setting it up on the big one so you get the direction, and then you're going to set it up again on the smaller time frame to scalp in between. So first of all, you need a K2 signal present. Second, K2 trend meter not match. Red, green. And lastly, entry price not within 10, 15. See, the problem with indices is that you're gonna have to add a 0 to it. So instead of 10, it's gonna be 100 or 150 pips away. Because indices move a lot faster than normal FX pairs. So these are the requirements that you're looking for. So first of all, you want to make sure that a K2 signal is present. Right here we have a sell signal. And then next, we're going to make sure that the K2 trend meter does not match. So if the signal is red, you want to make sure that the trend meter is green. This is indicating that we're in an uptrend. And this candle right here is just a pullback candle or a retracement candle. It's not directional in that direction. It's basically just indicating that price is going to move down temporarily. But since the overall trend is up, we're anticipating this to shoot up and correct to the overall trend. So once you have those two requirements, you have number one, the signal present. Number two, the K2 trend meter doesn't match. Lastly, you just want to make sure that entry is not within 100 to 150 pips from the K2SR. So right here, we're going to enter on the high of the signal candle, which is going to be, we're going to zoom out first. Choose the long tool, set it at the high, and there we go. This is actually pretty. This is way too big. It's like 8,000 pips, and I'm not anticipating, price to move 8,000 pips in a few minutes, few hours. So I'm gonna do it manually. Generally, I put the stop loss at the previous swing. So if this is where current price is, and this is the low, you can see that this is a low, the swing high, swing low. This might be the swing high right here, if not up here, but this is way too far. But that's why the tool measured it up here, because this is probably where it's determined that this is the previous swing. But I'm going to move a little closer to this swing right here, because this could also be a swing. It's subjective, so it depends on how you see things. But personally, I think this would be the swing right here. So the swing is about 6,000 pips. And then your profit target is going to be 6,000 pips as well. We trade with a 1-to-1 risk to reward ratio. So if you have a 6,000 pip stop loss, your profit target is going to be 6,000 pips as well. And lastly, you just want to make sure that price isn't within 100 to 150 pips from the K2SR. So we're going to use a measuring tool and then measure it from entry to resistance, which is the K2SR. And it's about 2,000. So all requirements are here. Next, since you wanted to see the scalping strategy, now we're going to do the same exact thing, but on a shorter time frame. So right now we're on the 30-minute time frame. Now we have the parameter set up. This is the entire move. So you can have a trade going, like one trade going for the full move, and then you can have a smaller trade going for scalping. So now we're going to go down to the 5-minute chart. Once you're on the 5-minute chart here, you're going to do the same thing. You're going to look for a signal, and then you're going to want to make sure that the trend meter doesn't match. So as you can see right here, we have an opposite signal. So this is a red signal, and the trend meter is green. So this is a valid entry for a scalp, or not even scalp, just for any type of K2 pullback entry. And this lines up exactly with our entry now. So what we're going to do is we have the requirements set up. So we have the K2 signal, and then the trend meter doesn't match. Lastly, for the last requirement, as you can see on the 30-minute, we wanted to make sure that price was not within 100 to 150 pips from the K2SR. The thing is, we've already measured it on the 30-minute, so we know that it's fine. So we're gonna disregard that last requirement for the scalping, and then this is gonna be our entry. So to determine our smaller TP and stop loss, we're gonna set it up right where we had it originally. So there's a smaller move. So if you're looking at this from the 5-minute chart, this is going to be the smaller move. So for the scalp, we're trying to hit 2,486 pips, but the entire move is going to be 6,000 pips. So let's let this run. Now what we're doing is we're just waiting for price to come and trigger our buy stop, because you'd have a buy stop entry right here, and then once it enters, we're going to let it run to TP. So price hasn't triggered it yet. We're still pending. Right here, price triggered. So now we're waiting for it to hit TP, and there you go. You hit. If you took that scalp trade, you would have made. How much was it? 2486. So for that scalp trade, you would have made 2,486 pips. That's the gain right there. This trade ran for about, so it entered right here. We had this trade running for about 1 hour 20. So if you're trading a standard lot, or I mean not even a standard lot, a micro lot, depending on which broker you have, generally they're about, it's equal to $1 a pip. So if you made 2,486 pips times $1, you would have made $2,486 in 1 hour, 20 minutes. And that's scalping for you. And then pretty much, since you're still in the full move, you can do it again. So now we're just going to wait for another entry. So that's the first scalp one right there. You would have made 2,000 in about an hour. Now we do the same thing again. I was running super slow. All right, cool. So right here, same thing again. We're running the same exact strategy. You want to make sure. All right, whatever. We're just gonna leave it there because I can't move it. So same strategy. You want to make sure that there's a K2 signal present. Right here, we have a sell signal. Next, you just want to make sure that the K2 trend meter does not match. So if we have a red signal, the trend meter's got to be green. If you have a green signal, the trend meter's got to be red. So right here, the signal is red and the trend meter is green. And that gives us a valid entry. Like I said earlier, we're going to disregard the third requirement because we already know where the resistance is on the 30-minute chart. And what we're going to do is we're going to set up our profit target and stop loss. We're going to zoom out. Hit your long position. Your entry is going to be on the high of the signal candle right there. All right, so for this move, we're going for 2,569 pips. And then let's let it run. Oh, man, this one's playing around. Let's see, so if you're using the exit strategy, you would have moved your stop loss either to break even or 25%. So if you did that, we're just going to ballpark it. It's about 700 pips. So you would have moved your stop loss up here once price reached 50%, and then you would have just got stopped out in profit. But let's keep running it and see what happens. So if you let it run and you didn't move your stop loss, which is risky, I don't recommend that. But you know, some people don't really care and they'll just let it run. So if you do let it run, looks like, damn man, this thing plays way too much. Laggy. Yeah, see, this is why I wouldn't let it run. Like, you got to make sure that you eliminate your risk whenever it's possible. So if you pick this trade and then use the K2 exit strategy, if you guys remember how the exit strategy works, what we do is we set points at the 25% mark, the 50% mark, and then at the 75% mark. So if you were to use the K2 exit strategy, once price reached the 25% mark right here, you would have moved your stop loss to break even. So that way, if price was to retrace back, you just break even. You don't lose any money. But once price reaches the 50% mark up here, you would have moved your stop loss to 25% right here. So if you move your stop loss to 25%, you would have locked in 525 pips, even if price was to retrace. But if price reached the 75% mark right here, you would have moved your stop loss to 50%. So if that happened, you would have locked in about 1,300 pips. And that would have been perfect because right here, if you move your stop loss to 25%, as price came down, you would have got stopped out in profit, made about 700 pips. Or if price reached 75%, you would have locked in 1,300 pips up here. And then you wouldn't have had any losses. And as price came back down below the entry point, you could have re-entered right here. So if you re-entered, you would have done it again. So as price reached 25%, you would have moved your stop loss to break even. Once price reached 50%, you would have moved your stop loss to 25%. And then once price reached 75%, you would have moved your stop loss to 50%. So if you did this twice, you would have made, from this stop and profit, you would have made 500 pips. And then if you re-entered and did it again, you would have made about 1,300 pips on this trade too. So you would have made approximately 1,800 pips on that one move. And then you would have held this trade for about, you would have pulled back, stopped right here, for about 8 hours. So we add that up, we got that win right there. And then we got another win for 1,800 pips, if that was the case. If not, you still would have gone stop down profit because you would have still used the exit strategy. But this is why we don't recommend that you don't move your stop loss. We always recommend that you eliminate risk whenever possible. Let's see if we run it. Actually, you still would have been fine on the full move because the full move is still active. Trying to see if it, yeah, price already reversed at that point. So yeah, like just from scalping, you would have had these two or three wins, and if you added that all together, 486 plus 1,800, 4,286. Yeah, so a total of scalping probably like 8 to 10 hours. You would have made that many pips, 4,286, and then if you convert that to a dollar per pip, you would have made about $4,286 in about 10 hours. But on top of that, you could have been doing the smaller moves. Let me go back to forgot who asked this question. Oh yeah, Jay, do you understand what I went over right now with the scalping? I just want to make sure if this answered your question, because if not, I could go back and run through it. I was going through it a little too fast. Yeah, Pitboy, this is scalping. So scalping is the smaller moves within the entire move. But these are indices, so I'm not sure if you're familiar with indices. They move a lot faster than normal forex pairs. So it's usually like times 100. So if you're like one pip trading a normal forex pair. Oh, Carlos, hey, what's up, bro? I was like wondering who. Yeah, no, of course. Yeah, you're very familiar with this, bro. There goes the account. Yeah, I know, bro. You gotta, if you're gonna trade indices, you for sure gotta have a way bigger account. I know a lot of people try to trade it with smaller accounts, but it's just not really possible. I know I show you guys how I profit with like a $500 account, but it's only because I know what I'm doing. I don't expect you guys to trade on my level because obviously I've been trading for about 8 years now, so I've seen the good, I've seen the bad, and I'm able to control my emotions, unlike a lot of new traders, because it's hard for you to control your emotions if you have money on the line. OD said Jeff blew 3K on US 30. I know, man. US 30 it's a love-hate relationship, bro. Like I was telling Aaron, I was up a lot, like 700 a couple days ago, and I blew like 300 of it in a matter of minutes because I was acting stupid.
Yeah, you got to be careful with those.
Yeah, but I mean, you can make a ton of money. If you guys saw my last post, when we had the live trades, I think it was the first live trading room. I think I made like 2,600 in a couple minutes. It was just scalping. It's crazy, but it shows what's possible. All right, let's see. I'm gonna go back to the questions again. I didn't see Jay respond, but if Jay, if you want me to go over it again, I could. But otherwise, I'm gonna go and see what other questions we got here. Let's see. Next, we got Reason said, do you know how to take viewer only mode off on Tradingview? Aaron, do you know what he's talking about by that?
No, nope.
Viewer only mode?
Never heard that term before.
I'm not sure. I never seen it because whenever I go on TradingView, it's always like this. Unless you're on your phone, it might be different. But on the computer, it's usually like this. I'm not really sure. Let's see, did you message us? Yeah, I'm not sure. I haven't seen a. I don't even think it's an option on mine. Let's see. Yeah, no, you know, I don't even have that option. Yeah, sorry, bro. Unless you can show us like what it looks like, we can probably help you. But otherwise, I've never heard of that before. Viewer only mode. Yeah, I'm not sure. All right, cool. Let's keep going down. Forex Master wants us to look at S&P. S&P is pretty similar to US 30. Let's see. So for an S&P, it moved exactly how we just made. Aaron, do you remember when we charted this? That's crazy. It moved exactly how we saw the rejection come off here. I think CT gave me his chart for this too.
Yeah, I don't think we did a chart for that one, or did we?
No, I think CT had the chart, and then
It was CT. It was.
he charted the liquidity, and then I just charted it with the support resistance, because I think at that time the resistance was up there. Yeah, exactly. It's crazy how accurate the K2SR indicator is, because if you see there, it rejects exactly off. Oh, that's crazy. Yeah, there we go. Yeah, so if we're looking at the S&P, personally, I look at it. I still think all indices are bearish. I personally wouldn't buy them. So it looks like this looks like a good range right here. So what could be happening right now is the S&P might be going into a consolidation range. Um, depending on this candle right here, this candle could either break through the support. If not, it'll probably just get stuck in a range. So what might happen is it might test the support, and then it'll just get stuck in here until it breaks out. But we could probably break out around midnight. Hey, Aaron, can you check the GJ?
All right, I got you right now, bro. I just got it too. Let's see. It might be invalid. Let's see.
Yeah, it was just a pullback, so I don't think it's
This is
valid.
valid.
Yeah.
Let me click on EJ. EJ was bearish at first. Let's see. EJ.
Yeah,
Yep.
so it opens around this time. What could happen, like what I personally think is going to happen, is I think it's going to come down, test support, and it's going to break through it and just go south. So if you're going to enter a sell position, I think it'd be good. The trend is still heavy down. It looks like it's going to, if this is a high right here, then it would have established a lower high. So if you're following the Elliott wave theory, so there's 1, 2, 1, 2, and then 3, 4, 5. So it completed there. I mean, I'm not really good with Elliott wave theory, but this is just a quick drawing of it. If this establishes as another high, we could probably see another Elliott wave theory come down. Yeah, so we could probably see it move down even further like that. But I do see it coming down. So if you're in a long position, I probably would get out of it if possible, because clearly it's in a bearish market right now. So I definitely see it coming back down. Maybe not this. This might not happen within the next couple days, but I do see it coming down further. And then we have NFP on Friday, so I mean anything could really happen. You could have a crazy breakout upwards on Friday, and then it just comes crashing back down. It just really depends on what the institutions want. But obviously, this is like the time when there's a lot of open manipulation going on. I don't see it breaking farther than I don't see it breaking too far up during from now until London. it looks like it's coming down. So yeah, if you have a sell position, I think you should be fine. I would just keep your stop loss tight for any random, breakouts.
Excuse me.
Oh yeah, see, this is exactly what we had lined up too. And whatever, I'm just gonna show you CTs. So this CTs, that's exactly where the drop came. So he drew the liquidity up here, and then he anticipated that it was gonna come crashing down, and that's exactly what happened here. So that was like, that was an amazing markup at CT. I hope CT took it. They made a ton of money off that. So if you took that from up there where it rejected, yeah, like 2,000 pips in a day. That's crazy. Like I know this is worth less than the US 30, but I mean it's still a lot. Like if you can afford to trade US 30, you could trade S&P. Make some nice money. Yeah, CT, that was a great markup. It was right on point. Let's see what else do we got here. I'm gonna go up the list. S&P. Okay. Joe said, do you see US 30 keep going down, or do I see an uptrend? Let's see. Let's go back to it real quick. US 30. All right, cool. So US 30. Personally, I think it's going to keep coming down, but it looks like it's retracing up a little bit. It's kind of hard to draw because it dropped down so heavily. It's going to be hard to draw, trend lines right now. The PT trend meter is neutral. I think it's going to correct back downwards though. So looking at the 4-hour, it definitely looks like it's coming down. But like I said, it might retrace a little farther up. It doesn't look like it's done retracing yet because it dropped down so heavily that, it needed to retrace at some point. So if anything, it might retrace to maybe around this area. Maybe like around this area right here. It might pull up and then retrace from there. But I mean, this is a 4-hour chart as well, so that's a pretty far move. Actually, it's not that far. It's 1,800 pips. So let's go back on the 30-minute. What might happen is it might pull up right there and then come back down. So what you could do is if you want to enter like a sell stop, you could just trail these candles right here. So the way that I would do it is I'm just using the drawing tool. The way I would do it is I would follow these bullish candles that have wicks, because you can see that there's some resistance there where it came back down. So I would just trail it. This wick looks a little too small, so I personally wouldn't trail that one. But what I'm doing here by doing this is I'm anticipating a drop back down. So see, this wick is too small. I wouldn't do that because there's not enough space. But I would just keep following it as it's riding up. So you can see here, if we were doing that as price retraced right here, see like there's a wick right here, another wick, and then price came down and triggered. So if price came down and triggered right there, your sell stop, you would have made 2,857 pips, like instantly, because it went straight down. Or you could even just follow it all the way down and made 4,527 pips, like easily within like a couple hours. So that's what I would have done here too. It's the same exact setup. This is kind of similar to the K2 pullback strategy. So I would put a buy stop and a sell stop right there. So if price was to swing back down, you'll enter this trade automatically and go straight into profit. Like I'm not going to share this in the premium group because it's a risky like strategy and entry. Personally, I do this on my own time. This is how I scalp, depending if the trend's super heavy. So if you don't want to enter this, there's a parameter. You can enter the entry is going to be 21072. Profit's going to be 20786.3. Stop loss is going to be 21577. But this would be a scalp move. So as price moves into profit, then I recommend that you move your stop loss even or in profit like immediately, because due to how market conditions are moving right now, there's like a lot of crazy movements. So I wouldn't risk it by just keeping it open. But this would be a nice entry right here. If you were thinking about entering that, I'll leave it right there if you want to copy that. Otherwise, I'm going to keep going. Let's see. So Joe, yeah, that was Joe's question. Next, we got let's see. So we got Flip. He said it's if we can check CHF JPY. We actually looked at that earlier, so the markup should still be there. Yeah, so with CJ, the reason why we weren't, we've been watching it and we do want to enter it. So I did set up a sell stop entry there if you wanted to use the K2 pullback strategy, which I think will fill in a couple hours. But the only problem is there's CHF news in a couple hours, in about I think 2 hours now. So last time we checked, it was like 3 hours. Yeah, so like in 2.5 hours, there's going to be high impact Swiss news. So we're just going to avoid this completely. But if you do want to enter this trade, this would be a good entry point. So if you want to see that, there's a parameters. Entry would be 110.691. Profit would be 109.993. And the stop loss would be 111.389. Sorry, I'll put it back right here. And yeah, pretty much we ran through a pullback entry right here. It played out perfectly. I definitely see it happening again right here. So if you do want to enter this, you're more than welcome. But personally, I would just wait until after news because high impact news can affect it heavily. And the your stop loss is 69 pips away. So if price was to break out in the opposite direction, you might get stopped out. So I would just wait for news. Once news is done, then yeah, it'd be good to enter. I don't know if there's any other news. Hey, Aaron, do you know if there's any other news today?
I think there was Euro, and I think that's about it. Then USD tomorrow.
Gotcha.
Tomorrow morning.
Oh, then we're cool, man. Yeah, that's cool. All right, let's see what else we got here.
I think Euro's about 3 hours for Euro.
Yeah, I would just hold off on that. Let's see, Pitboy. Pitboy said, how do you determine short versus long position? Oh, that's Carlos. I was like looking at Pitboy again. It's just Carlos. Yeah, so the way that we determine if we're going long or if we're going short, we go in the direction of the trend. So if it's trending downwards, we'll take short positions. If it's trending upwards, like it did right here, and we're only going to be taking long positions. And that's just basically the basic explanation of how we're going to take trades, or if we're determining if we're taking long or shorts. Let's see. Josh said on CJ. Oh yeah, we actually went over that already. It's a pullback entry. Sorry, FOREX Master asks what's the stop loss on EG. So the stop loss on EG was 0.88735. I don't know if he's still on here, but yeah. see, is there any other questions? Aaron, do you see any other questions? I think that's about it. Oh no, actually, I sent Japan index, so let's go over that real quick.
Yeah, from Kyla.
Yeah, kind of getting over to that. Yeah, so the Japan index moves really similar to US 30. So if you look at that, it looks pretty similar. But I do see it in a heavy downtrend right now. I think I was looking at this myself earlier. So it's in a heavy downtrend right now. And it's kind of close to actually it's not that close. It's about 2,000 pips from support. But what I do see happening here is, since it's retracing, this actually might be the high. So if this is the high, I see it coming down and testing the support. And then I think it's going to keep coming down just like every other indice. So I see it coming down pretty heavy. If it doesn't come down right now, it's probably going to come up and test the trend line. And then once it tests the trend line, then I see it coming down. So if you were to enter this, or if you wanted to enter it, using the K2 pullback strategy, you could have entered like way down here, but I probably wouldn't enter it right now. The problem with this is that you'll have to see like how price moves once London opens, because it's probably going to follow the movement that it makes after London breakout occurs. So the thing is, once London opens, it might have a bullish movement up, and then it's probably going to push up a little higher until it comes down. Otherwise, I see it coming down. So if you do have a sell stop down here, you'll be pretty safe, because the entry is pretty far. It's about, yeah, it's like 2,900 pips. So I would just keep watching it. I personally wouldn't put any entries in right now. But if you want to look at this, these are the parameters if you just want to look at it. I personally wouldn't put it in because we're not sure what's going to happen in the next 6 hours. But yeah, if you do want to just look at it for yourself, that'd be the entry. So the entry would be 17809.2, profit would be 17448.8, and the stop loss is going to be 18.69.6. But I'd keep watching it. Maybe put an alert around this area. So once price reaches, around this area, you can go and check the charts. But I wouldn't just put a trade in there and just let it sit, because if you do that, it might trigger your order and then shoot the opposite way. You definitely don't want that to happen. Let's see, Aaron, is there any other questions?
I think that's about it.
All right, cool. All right, guys. Let's see. Yeah, if there's any other questions, you guys feel free to let us know. Otherwise, we're going to get off. We've been on for about 2 hours now. So, yeah, if you guys have any questions after this webinar, I'm going to be uploading this to YouTube shortly after. But if you guys do have questions, feel free to throw some questions out in the Telegram. And I think me and Aaron are going to try to do this twice a day now. So we're going to do a morning session. We'll probably be on at 9 a.m. tomorrow, Pacific Standard Time or Pacific Daylight Savings Time. So depending on where you're located, it's going to be 9 o'clock for us. So we'll probably be on around that time. And then we can link up then if you guys have any questions or if you guys want me to show anything on the chart. But yeah, guys, it was a good live trading room. Unfortunately, we didn't get to enter anything right now. We are in Asia session, which is the slowest session, and then there's not really many entries for us to get in on right now. But yeah, if you guys want to join our trading room tomorrow, we'll probably be on around 9 a.m. If not, we'll be on again later at night at 7 p.m. our time. Other than that, we'll talk to you guys later.